The Nightly Business Report with Paul Kangas in Miami and Cassie Seifert in New York.
Good evening. Today's leading economic indicators are leading economic analysts to conclude indications are the economy's getting better.
That news led investors on Wall Street to push stocks to the upside, and the Dow Jones Industrials ended the day with another 25-point gain.
The Nightly Business Report is made possible by Digital Equipment Corporation, leveraging investments in information systems for today and tomorrow. People come to us for results. The $57 billion Franklin Group of Funds, helping nearly 2 million investors reach their goals since 1947. Franklin funds are distributed nationwide by investment professionals. A.G. Edwards, member of the New York Stock Exchange, serving the investment needs of individuals and businesses through more than 400 offices nationwide. And is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communication services worldwide.
The government's main economic forecasting gauge indicates the black clouds may finally be lifting and the economy is improving. The index of leading economic indicators edged up 0.2% last month, less than some economists had expected, but the first time in a long time that the index sustained 3 consecutive months of increases. Dennis Moore reports.
Consumers are saying they believe the economy is improving, and that optimism outweighed an actual decline in orders for consumer goods last month. More important, businesses are acting as if they believe the economy is improving, spending money for new equipment and new hiring.
That, to me, is the real essence of it. If business is really going to hire more people and buy more equipment, we're going to have a recovery.
The March increase for the leading indicators followed gains of 0.8% in February and a full point in January. The rule of thumb is 3 consecutive monthly increases signal recovery 6 to 9 months ahead. However, there were 6 consecutive increases last year from February through July and no growth to follow.
Last year, in fairness to my clients, a lot of them said, yeah, we know all the numbers about a recovery, but we don't feel it. And this year I'm getting a different response. They say this time it's for real.
Examples? Factory orders were up 1.6% in March, also for the 3rd consecutive month. And while they were led by the notoriously volatile aircraft sector, there was also more demand for autos and other significant durable goods. And while new claims for unemployment benefits were steady last week, the more reliable 4-week average continues to decline.
Though the pieces of a recovery do seem to be falling into place, it's not yet a sure thing, and the primary threats aren't so much economic as political.
The Fed has driven short-term interest rates down to the level of inflation or below, a rare event cynics attribute to election year accommodation, and the administration fears may not last.
If the growth of money supply were to stagnate in the spring or summer of '92, as it did in the spring and summer of '91, the recovery would be threatened and an opportunity lost.
The president's also been priming the pump with public works and other domestic spending, and analysts warned that when the political motivation fades after the election, so too could that fiscal and monetary stimulation. Dennis Moore, NBR, Washington.
Still benefiting from a little of yesterday's upward momentum, which lifted the Dow Industrial Average to a 25.25-point closing gain. Stocks edged slowly higher early today, getting some added help from the improved leading indicators and factory orders. At 11 a.m., the Dow was up 8.25 points, 7 stocks higher for every 5 lower. The market moved nicely higher during mid-session as investors gained confidence that the recent flow of better-than-expected earnings was no flash in the pan. A firm bond market was also a plus. Thanks to solid gains in Alcoa, Goodyear, and DuPont, the industrial average was up over 16.5 points at 1 p.m. And the rally continued to build momentum on buy programs and short covering as the session wore on. And the Dow closed with a gain of 29.94 at 3359.12. And for the month of April, it gained 123.65 points, or 3.8%. Now today we closed within 2 points of the best level and up 30.5 from the lowest level of the session. Trading volume today moved up smartly, almost 24 million shares more, and more than twice as much up volume as down volume. Pretty impressive. Transports didn't do much, up 5 points, but the utilities had a good percentage move with that gain of 2.57. The closing tick an extremely strong, bullish, plus 862. Standard & Poor's 500, 400, 100, all multiple point gainers approaching their record highs. Commodity Research Bureau May Index up 0.40. And the New York Stock Exchange Index up nearly 1.75 Value Line up nearly 3 points. And the Wilshire 5000 up the better part of 34.5 points. All of these are getting near their records. After the market closed, the Federal Reserve reported on the week ending April 20th, the M2 money supply rose $1.6 billion. The very modest 0.2% increase in the March leading indicators helped bond prices edge higher early today because the figures added credence to the growing belief that while the economic recovery is here, it won't be a barn burner, and therefore interest rates and inflation aren't likely to spike sharply higher, prompting a tightening of monetary policy by the Federal Reserve. Against this setting, tax-free and corporate issues closed with eighth-point gains. Longer-term governments rose between 1/4 and 3/8 of a point, like the 30-year Treasuries up 10/32. The Shears and Lehman Long Bond Index up 2.83, and Fed funds settling back at 3 13/16%. Later on, I'll show you where the action was on Wall Street today.
Chrysler Corporation today became the last of the big three automakers to report quarterly results and the only one to report a loss. Chrysler said it lost $13 million, or 7 cents a share in its first quarter. But even Chrysler is doing much better now than it did 1 year ago, leading many on Wall Street to predict the American auto industry has turned a corner. Scott Gervey has more.
Chrysler's losses are less than its losses in the first quarter 1 year ago, even after subtracting gains from a one-time asset sale and accounting changes. And analysts are encouraged to see that revenue is up 40% and that many expenses are also one-time events.
The company is operating with a burden of enormous startup costs pertaining to new products. Those costs are here now. The products will be here tomorrow. So it hurts near term.
Chrysler results are at the high end of Wall Street expectations. And yesterday, Ford surprised most analysts by reporting much stronger than expected first quarter earnings, equal to 60 cents a share. Worldwide, Ford's sales rose 17%. It was Ford's first profit in 5 quarters. And General Motors kicked off the week by reporting a small profit in its first quarter. It was GM's first profit in 6 quarters. Many analysts were projecting a loss. The results tend to support investor actions, which have bid up all 3 stocks since the first of the year. Analysts say that is more proof of a fundamental change in the outlook for the industry.
I think what people are starting to smell is the possibility of higher market share for the big three than what anybody would have been led to believe as recently as 6 months ago. And that's a real powerful valuation argument for buying the stocks.
General Motors is about to make the world's largest stock offering. It is so large, almost every major Wall Street firm is involved, and few analysts can discuss the company. But many say it appears that the new issue will be received well. Scott Gervey, NBR, New York.
UAL says Vice Chairman John Pope will take on the positions of President and Chief Operating Officer. Pope replaces Stephen Wolf, who remains Chairman and Chief Executive. Meanwhile, Wolf describes UAL's first quarter results as woefully unsatisfactory. The parent of United Airlines reported a loss of $92 million compared to a $157 million loss a year ago. UAL stock today up 1/2 at 124.5.
A year ago, Pan Am was struggling to stay afloat. Time ran out for the pioneering airline, but for some employees, saying goodbye to the 64-year-old company was difficult. Some decided to pioneer different skies, hoping they can at least keep the airline's memory alive. Karen Ryan reports from Miami.
Pan Am Airlines may have disappeared last December, but for some, the company lives on.
We don't want anyone to ever forget Pan Am, because Pan Am was the pioneer of the industry.
Former employees are helping people to remember. They have reopened Pan Am Aware, the company's employee store, to the public. The store sells everything from watches to caps to model airplanes with the Pan Am logo printed on it. So far, selling the bankrupt company's logo is taking off.
The first day I opened this store, we did $4,000 worth of business. And as you can see, it's all small items. They're not big, big items.
Now the store averages about $400 to $500 a day. But this store isn't about money, and the items aren't collectibles yet, although each trinket is invaluable to its customers.
I came to this country on a Pan Am jet many years ago, and so I have a feeling for the company.
This is really a great part of my life, and so I want little tokens of it.
And some of the tokens are part of aviation history, like Panajet vitamins. Vitamins that Pan Am ordered from the government 60 years ago to help keep their employees healthy while clearing brush to make runways in Central and South America. Or official Pan Am pearls, the only jewelry the company once let its stewardesses wear. There are even pins from all the countries the airline once flew to. Money from store sales are earmarked for a Pan Am museum. Former pilots hope to keep the Pan Am name flying right here in the same spot where the company first built its seaplane terminal. Karen Ryan, NBR, Dinner Key Marina, Miami.
Still ahead, Linda O'Brien talks to former German Chancellor Helmut Schmidt about the current state of the German economy. Rioting and fires in south central Los Angeles have apparently had little impact on commerce outside the affected area. Efforts to control the damage today did not interfere with trading at the Pacific Stock Exchange or with international banking activities. But the Insurance Information Institute now says insured buildings have sustained at least $100 million of riot-related damage. Insurance adjusters say police have asked them to wait until fires and looting are completely under control before entering the area to assess the damage. In Chicago, recovery from underground floods could cost local governments $10.5 million, according to Mayor Richard Daley. That's on top of the $1.5 billion drain the floods have already put on Chicago's economy. Water began pouring into the basements of businesses 2 weeks ago. The federal government, Paul, has committed to picking up nearly $27 million of the recovery costs.
Well, anybody who thought this bull market was dead, certainly all wet. Let's have a look at this closing Dow. Second day in a row, better than a 25-point gain, almost 26 today. And now we're within 7.5 points of the record closing high set on April 16th. 1,182 issues higher, only 560 lower. Certainly a broadly based rally, and 80 new highs for the only 25 new lows. Topping the active list on 4.9 million shares, a low-priced issue, Saatchi & Saatchi, the advertising firm, edging up 1/8 of a point. Then Chrysler down 3/8, despite the smaller-than-expected 7-cent first-quarter per-share loss, but the stock has risen in recent weeks in anticipation of that. Glaxo Holdings gained a full point, PepsiCo rising 7/8, Telmex down 1 1/4 after the close yesterday. Telmex reported first-quarter earnings up 12.7%, not apparently up to expectations. Ford Motor down 3/8, a little profit taking there, but DuPont did well, up 1 5/8. Company had lower but better than expected earnings out yesterday and also boosted the dividend by 5%. Today, Smith Barney repeated a buy on DuPont. Borden showed no change. Philip Morris down 1/2. IBM up 2.5 points. There are rumors it'll combine with Time Warner to tap out Time Warner's vast entertainment library through advanced computer technology. Alcoa, one of the Dow stocks, doing well, up 2 3/4, big cyclical in demand. Digital Equipment making a rebound after recent weakness with a 1 1/4 point gain. Duracell International charged up some of its owners, up a 2-point gain there. Company had 4 cents in earnings in its third fiscal quarter, up from a 33-cent per share loss last year, and the company predicting a strong fourth quarter. Hilton Hotels up 2 1/4 points on positive comments from an analyst at Solomon Brothers. Norsk Hydro gained 1 1/2 points. Kemper Securities came out with a strong buy. And Texaco moving up 1 3/4. The energy analyst at Dean Witter had some very positive comments on Texaco and Amoco, Unocal, a number of energy stocks. J.M. Smucker up 4 1/8. We called and could not get in contact with any official of the company. No one was available, but when we do find out a reason, I'm sure it's got to be good. Cadence Design Systems up 3 1/8. We did talk to an official there, and he couldn't explain the strength in the stock today. Ameriscribe Corp up 1 3/8. No problem with this one. First quarter earnings of 17 cents, way up from last year's 1 cent per share. And Ryland Group, a South Central United States home builder, up 1 3/4 points. Earnings of 15 cents in the first quarter versus a loss of 41 cents per share last year. General Re, the big insurance company, stock down 7 3/8. Operating earnings down in the first quarter, $1.33 versus $1.53, and the chairman says he sees no turnaround in earnings till the end of the year. L'Oreal Corp down 1 5/8. Goldman Sachs removed it from its recommended list because it feels the near-term future is uncertain. NASDAQ trading a gain of just about 8 3/4 points in the index, volume down just a tad from yesterday. 1,348 issues higher, 794 lower. The 100 index up just better than a 9 3/4 point gain. Microsoft up or down 1 1/8. Apple Computer did well, though, up 3 1/8. Amgen rising 2. Intel up 1 3/8. BMC Software down 1/2. Novell gained 7/8. 1 point gain for Seagate. Medco Containment up 1 3/8. Lotus Development a 2-point gain, and Autodesk up 2 1/8 after Alex Brown came out with a buy recommendation. LCS Industries up 3 3/4 points. Second quarter earnings 39 cents versus 8 cents last year. The company's in direct marketing services. Advanced Logic Research up 1 1/4. Oppenheimer upgraded it from sell to market performer summer despite lower second quarter earnings. And Sonic Corp, which has drive-in restaurants in the South, up 1 3/4 on a strong buy recommendation from First Boston Corp. American Exchange Index up 4.83, volume up almost 3 million shares from yesterday, and 3 stocks higher for every 2 lower. Topping the active list, Wang Labs down an 1/8. Ohio Art Company, which a week ago today showed a big earnings turnaround, has been volatile since, but today up 4.5. Cognitronics Corp up 1 1/8 points, 29-cent in first quarter earnings versus only 11 cents last year, and revenues up 30%. Office Depot announced a 2-for-1 split today. Stock up 2, and Merrill Lynch edged up 3/8. It's going to boost its quarterly dividend from 25 to 30 cents, and the company also predicted a strong 1992. That's the Wall Street wrap-up. Cassie?
The positive economic reports out today failed to boost the dollar. The U.S. currency fell 1 pfennig against the mark, dropped 1/4 of a yen, and fell more than 1 centime against the Swiss franc. The dollar also edged lower against the Canadian dollar and the British pound. The United States has decided to raise tariffs on $1 billion worth of imports from the European community. The action is in retaliation to the EC's refusal to cut oilseed subsidies. A 30-year-old trade agreement promised U.S. tariff-free access to the EC market. And the panel of the General Agreement on Tariffs and Trade has twice ruled that the EC's oilseed subsidies interfere with that agreement.
Germany's longest and most bitter public sector strike since World War II is showing no signs of ending. In fact, work stoppages are spreading as the government appears determined not to meet wage demands. To shed some light on the crisis, NBR's Linda O'Brien spoke with former German Chancellor Helmut Schmidt at Digital Equipment's Deck World Symposium in Boston.
We are hearing a lot about serious problems now facing Germany. The current strikes, the resignation of one of the popular leaders, Hans-Dietrich Genscher. Chancellor, will Mr. Kohl's government be able to maintain the leadership in this current climate?
Well, that remains to be seen, and I am curious about that one as much as you are. But I think one has to understand the underlying reasons for all this. The financial situation of Germany, the budgetary situation, is strained due to the enormous transfers that are necessary to the eastern part of Germany after unification. And this then has led to disappointment in many people in East and West as well. On one hand, the strike is one of the results, and the cabinet reshuffle is another one. Both of these events are relatively normal in parliamentary democracies, and altogether we have seen much fewer strikes in my country and much fewer cabinet reshuffles than in any other European parliamentary democracy, so I'm not overly concerned.
Did Chancellor Kohl perhaps misread what it was going to take for German unification?
The answer is flatly yes. He underestimated the difficulties.
A top U.S. official last week called for Germany to ease interest rates. How can Germany accomplish that, considering its current internal problems?
Well, I think it was a misplaced appeal by the United States official to ask Germany to get its fiscal house in order, because the American fiscal house is a much bigger disorder than is the German.
As a member of the European community, which is gaining strength, won't this be a particular problem, this interest rate policy, for the other countries in the EC?
Well, yes, it is a problem for some of them, but you know, the common market doesn't exist since yesterday. We have been building it up over 35 years now, and we have had periods of high rates and of low interest rates, and this one now is a period of high interest rates. It won't last forever.
When will a European currency actually replace the Deutschmark and other individual currencies?
Well, if it happens, it will not only replace Deutschmark, but also French francs and Dutch guilder and Spanish peseta and Italian lira, and even possibly British sterling. The question is whether they really will live up to the agreements that they have agreed to among themselves in Maastricht last December. They set a date, 97, and an ultimate date, 99. I hope they will persist. I hope they will stick to their policies. But I'm somewhat skeptical, because when Giscard d'Estaing or myself created the European monetary system in 1979 and 80, since then nothing has been added to it, although we are 12 years later now. They have been somewhat lazy, and somewhat did they lack the courage.
Do you think we will see a common currency then?
I hope so. I'm not quite sure.
With the present strife in Germany and the current concerns, do you have any desire or plans to return to a leadership role there?
No, certainly not. I'm a little bit too old now.
You are the founder of the Economic Summits. What will be the dominant theme during this year's session coming up in several months?
This year, I think they will try to put together the bits and pieces that will be left over after the Earth Conference in Rio de Janeiro. They will fail in Rio to address the core of the hard core of the problems, as there is overpopulation and there is the threat of the oncoming greenhouse effects.
Thank you very much, Chancellor Helmut Schmidt.
In business briefs, negotiators for Caterpillar and the United Auto Workers Union met today with a federal mediator in a St. Louis suburb. It was the first meeting between the two sides since the UAW ended its 5-month strike against the heavy equipment manufacturer. Caterpillar stock today closed at 56th and an eighth, up 1/8. Chevron today disclosed that its planned restructuring will result in the layoffs of at least 1,700 workers. Chevron stock today closed at 69 3/4, up 1 1/4.
Coming up, tonight's Money File looks at minimizing your property taxes.
Olympia and York's troubles were discussed at Merrill Lynch's annual meeting today. The brokerage says it has modest exposure to O&Y of more than $35 million. Meanwhile, some Olympia and York bonds backed by New York real estate were downgraded 5 notches today by Standard & Poor's from BBB- to single B. The downgrade could make it difficult to renew mortgages on commercial real estate.
The nation's largest computer company is reportedly talking with the nation's largest entertainment firm about a joint effort to revolutionize cable TV. Published reports say IBM and Time Warner are discussing an alliance that would allow cable subscribers to access entire libraries of data on their television screens. The reports also say Time Warner is looking to expand the capacity of its cable TV systems. Neither company would comment.
In tonight's Money File, Kevin McCormley, executive editor of Kiplinger's Personal Finance magazine, offers some advice on determining if you're paying more than your fair share of property taxes.
Paying more than you should in property taxes? Note that I didn't ask if you're paying more than you'd like to, but are you paying more than you have to? You are if your home is overassessed. That is, if the value on which your tax bill is based is higher than it should be, and assessments are often way out of whack. To protect yourself from overpaying your taxes, take the time to review, and if necessary, appeal your property tax assessment. First, you've got to know how assessments are set in your area. Some places use the full market value of a property. In others, it's just a percentage of that value. This is why you can't smugly think you're getting a break if your assessment happens to be less than you think your home is worth. If the assessment is 80% of market value, but it's supposed to be just 60%, you're being overtaxed. Take the time to visit your local assessor's office to check the property record card for your home. The assessment is based on that description of your house, its size, location, number of bathrooms, etc. If there are errors, and there often are, they translate into higher than necessary tax bills. Make sure that anything that affects the value of your home, such as an easement, is noted on the card. And be sure you're getting credit for any exemptions you deserve, such as those for senior citizens and veterans. If you find a mistake, you should be able to get it corrected and the tax bill reduced without having to go to a formal appeal. Of course, even if the description is accurate, you could be overassessed. The value set on your home could simply be more than the place is worth. To prove that, you need to find out what other homes similar to yours actually sold for during the assessment period. And in some jurisdiction, an assessment can be challenged even if it accurately reflects market value. If every other 4-bedroom colonial in your neighborhood is assessed at $150,000 and yours is assessed at $200,000, that's not fair and it may be grounds for an appeal. Check with your local assessor about the procedures and timing for appeals where you live. The potential rewards are grand. Homeowners who successfully challenge assessments knock an average of 10% off their tax bills, and those savings keep coming year after year after year. I'm Kevin McCormley.
Finally tonight, we mark the passing of a Wall Street era with the official end of Drexel Burnham Lambert. Throughout Wall Street's wild 80s, Drexel led the junk bond revolution with an army of 11,000 employees, changing the way corporate America viewed debt. At the head of the charge was Michael Milken. But the collapse of the $200 billion market spelled doom for Drexel. Today, a new company emerged called New Street Capital Corporation. It's a small firm of about 20 professionals who will primarily manage high-yield securities that Drexel once owned.
And that's this edition of NBR for Thursday, April 30th. I'm Cassie Seifert in New York. Thanks for joining us. Good night, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
The Nightly Business Report is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communication services worldwide, and is made possible by A.G. Edwards, providing personalized financial services and investment advice to individuals and businesses. A.G. Edwards, a century-old tradition of service to investors. The Franklin Group's 66 mutual funds include tax-free municipal securities funds, U.S. government securities funds, capital growth funds, and money market funds. Digital Equipment Corporation, leveraging investments in information systems for today and tomorrow. People come to us for results. And by the financial support of viewers like you.
Local broadcast of the Nightly Business Report is made possible in part by member support and by a grant from Phonarola, Canada's business word for long distance, with offices in Toronto, Montreal, Ottawa, Buffalo, and Albany.